Hello everyone, and a very big welcome back. For those of you that celebrate, I hope you had a great holiday. For those who don't, I hope you had a wonderful, wonderful break. Today, I want to chat with you savvy investors, hopeful investors, and real estate enthusiasts. I want to dive deep into the Canadian real estate cycle and demystify some of the natural ups and downs that define our market. The real estate cycle can be a really confusing concept for a lot of people, even if you're a seasoned investor, but especially if you're just starting out. So I want to explore the basics and key indicators that can help make you a true consultant in this dynamic landscape no matter what's going on. First things first, what is the Canadian real estate cycle? Let's say you can picture it as the heartbeat of the market, as it were, a regular cycle between boom, bust, and recovery. And therefore, knowing its moves can help make you a strategic player. So let's keep it simple, shall we? There's nothing better. The basics of the cycle are as follows. Firstly, please note that nothing lasts forever. Just like the changing seasons throughout the year, the real estate cycle does the same thing. It's in a constant state of flux over and over and over again. Boom, bust, recovery, over and over and over. Just because it might be crappy this year doesn't mean it's going to be next year. It might not even be a crappy market 2 months from now. Who knows? That cycle can happen slowly or it can happen faster. It depends a lot on different types of factors, which we will talk about shortly. Secondly, also note that it is never as bad as you think, no matter what the news says. Even if the market is in a downturn or a crash in layman's terms, there are opportunities for those who know where to look. The more savvy you are, or the more informed you are as a buyer or even a seller, you know where you can find a good deal. Finally, as I said before, the easiest way to remember this is boom, bust, recovery. Repeat, repeat, repeat. It's the same thing throughout the cycle. Now let's define these a little bit more. So a boom is very simply exactly what it sounds like. Prices are on the rise, suddenly everyone is a renovator, expert, or house flipper. FOMO, otherwise known as fear of missing out, is a big thing that drives buying decisions. So think of the last boom that we had. Pretty much everybody should know what this is, right? COVID! The market went crazy, absolutely crazy. Houses were flying off the market within 2 days. There were multiple offers and everybody's trying to outbid each other and it's crazy, right? The market was white hot. That is a boom. What drives that kind of activity is primarily the fear of missing out. So what essentially that means is that everybody's so worried about missing that perfect house or missing that perfect property, land, or whatever it is that everybody's trying to get the same thing, right? They think, oh, if they don't get this one, oh, it'll never come up again, which is not true. But that's what everybody thinks, which drives the multiple offers, which drives up the prices, etc., etc. That's that hot market that you're seeing. That's a boom, okay? Very simple, straightforward. A bust is the exact opposite. It's exactly what it sounds like. It's a market crash. It can happen very quickly. Oftentimes you don't always realize until it's too late. You could be waiting, thinking, oh yeah, I'll sell my house next month or whatever have you, and then all of a sudden, oh no, things aren't moving so quickly. Prices take a nosedive, whatever it is, it can happen really, really fast, especially if you're not prepared for it. Essentially, what this looks like is people don't buy because nobody else is buying. Recovery is the uptick from that. So good deals start to show up, more savvy buyers are out hunting, homes are on the market for longer days, but there are more affordable options. The average person, however, still thinks it's a bad time to buy. Pre-boom, right? That said, in any one of these markets, there can be a deal found no matter what you're doing. You just kind of have to find the right education, and it really depends a lot on what you're looking for. Now, to get into a little bit more detail about how to identify where you are in the market, let's look at a few key indicators within each set. What should you be looking at? So within boom, bust, and recovery, there are certain things that you want to take note of. So under certain demographics, you want to take a look at things like net migration. So Chilliwack specifically, you can look at it 2 ways. We have a net migration of people coming in. So prices in Vancouver, Coquitlam, Burnaby, everywhere else, they're all quite high, right? Compared to Chilliwack, which is on the lower end of the price spectrum. Therefore, a lot of people are moving from Vancouver to the Chilliwack area. At the same time, because even in Chilliwack, prices are a lot more expensive than places like Alberta or Saskatchewan, people are also leaving Chilliwack. So when you take a look at it, it depends what's happening more. Are we losing more people than we're gaining? What's happening? That's a great number to look at to determine what you're in, boom, bust, or recovery. Another one is vacancy rates. What are they? Any average city website should be able to tell you roughly what the vacancy rate is. Whether that number is entirely accurate is a little bit up for debate because it sort of depends on what area of the city you're looking at. This is important, especially for investors. You want to pay very close attention to the vacancy rates, because if you're hoping to rent out your property, you're going to need to know if you're going to have trouble finding a renter, right? That's pretty essential. So for example, if you're looking between boom, bust, and recovery, and you're paying attention to vacancy rates, in a recovery and a boom, vacancy rates are down because more and more properties are being picked up and bought and then rented out. So there's less inventory, therefore vacancy rates are down because the homes are being lived in. In a bust, vacancy rates go up because there's often more inventory and not enough people are buying, and therefore renters have more options in general and there's more vacant homes. End of story. Employment trends. What are they doing? Going up or coming down? If they're going up, that's a great sign of a good, healthy market. If they're going down, that's a sign that the market is also going down. How's the construction? Same thing, up or down. More or less homes being built? First-time homebuyers, what are they doing? Are there more of them or less of them? Generally speaking, they're going to be less first-time buyers if the interest rates are higher, and they're going to be more first-time buyers if the interest rates are lower. Under their financial sector, the real estate return on investment, is it increasing or decreasing? To be a little bit more specific, what does that mean? That means on the investment that you just made, so say you bought your home 10 years ago for $300,000. I don't even know, let's not pretend that's accurate at all, but just hypothetical example. You bought it for $300,000. You can now sell it for, say, $600,000. That's a great return on your investment, is it not? Whether you're selling your primary residence or you're selling your investment, is that a good thing? Who knows? Same thing regarding cash flow. Is it higher or lower? What are the rental rates? Are they going up, going down? Rental trends, up, down. Same kind of concept as vacancy rates. Income in the area related to employment trends, is it rising or falling? Real estate financing availability, i.e. mortgage rates, are they going up or are they going down? Under the emotional side of things, how long is it taking to sell your real estate if you put your home on the market? In a recovery, it could take longer. In a boom, it is at its fastest point, and in a bust, it's at its slowest point. Revitalization efforts. So these are things in the city that essentially the community is doing to improve on itself. Things like transport and green energy and whatever it is that you can think of that makes the community more healthy or more functional, more economically reasonable, things like that. Are those at a plateau? Are they going up or are they going down? Real estate listings. So inventory. In a recovery, there will be a decrease in inventory because more people are buying. In a boom, there will be a decrease in inventory just before it takes back up and it goes quickly. You start at a large amount of inventory and it goes down quickly through the boom because people are buying it all up. Finally, how many sales are actually happening? Most real estate stat packages can tell you this, whether you've signed up for them on the real estate website or you just signed up for the stats package through the real estate board, anything like that. They're going to tell you the average number of sales for each month or quarter or what have you. Have they gone up or have they gone down? That's the biggest question. Up or down? Depends all what's going on. All of these things are ways that you can take a look at the real estate cycle to decide exactly what it's doing and in what area you're in. This helps you a lot because especially if you're in a recovery or a boom, just by looking at these things, you can tell what direction the market is going. It's a very analytical way of doing it, but it's functional. Take all of this data and you compile it to which section it belongs in, what it's doing in recovery, what it's doing in a boom, what it's doing in a bust. You can add it all up and be like, oh, we're heading from a bust into a recovery right now, for example. Then you decide from there what works for you, what do you need in real estate right now? Are your goals realistic at this point in time? Don't be afraid to dig in. Why is this so important to know where you are in the cycle? This affects you directly. It affects how you spend or save. It influences your decisions on purchasing a property, whether you're looking for a fixer-upper, something brand new, what your goals are, whether you're an investor or you're looking for your primary residence. How much are you actually hoping to capitalize on your purchase either now or in the future? Are you planning on flipping a home? What are you looking into doing? This helps you to consider both the short and long-term factors. At the end of the day, real estate is quite analytical, and when people get into trouble, it's when they haven't done their homework properly. Being in the know about real estate cycle isn't just about the trends, it's about the strategic decision-making. Because of that, don't hesitate to reach out to a real estate professional to help you with any of these decisions because they live in the real estate cycles day in and day out. It's their job to know this stuff, and they're going to be a lot better than you are just doing a Google search, I can promise you that. If you enjoyed this video, make sure you hit the like and definitely the subscribe button, and check out my other video on the cost of living in Chilliwack, BC. Have a good day and see you next week.